Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our Cash Tag segment. For that, let's bring in our next guest. We've got Landon Swan, co-founder of LikeFolio, joining us to take a look at Alphabet Google ahead of its results with the latest sentiment data. Listen, this stock has been the strongest of the strong, even as you see some of the Mag 7 kind of drift or become the Mess 7, as some of them are called. But Alphabet Google's still been holding in there. What does your latest data look like, Landon?
Yeah, it's incredible. I mean, I think they hit the high today, right? 355.79. So off of that a little bit, obviously, but still very strong performance from the stock. And this is all coming off of the heels of everyone, including myself, saying that AI is going to crush search. And I think the one thing that analysts and experts didn't really take into account is distribution. You've got Google has the platform where people are used to going. They've got Gemini. They can plug it in. And yeah, there's a bounce between which AI is the best. For a while, Anthropic had it. I think OpenAI may be retaking the reins, but it's going back and forth. And I think the everyday user's not switching, back and forth as maybe some of the other people are in development and things like that. So it is, they've got the distribution and they're showing that they're kind of flexing that. Even if you look at YouTube, I mean, their ads last quarter were up 9% on a year-over-year basis. The company's got over 300 million paid subscribers to YouTube, Google One, etc. And so, they're doing a lot of things right. And frankly, the data that we've got is showing them continuing to exhibit strength, not just in search, which is strong, consumer sentiment and YouTube, things like that, strong, but also I think one of the big ones is in cloud. Their cloud program is growing very quickly, up about 20 points on a year-over-year basis. You can see AWS is up 6, and Microsoft is the one that's really struggling. And I think you can look at their stock price and kind of see, how investors are reacting to that. But that is a significant move. AWS has always been the clear leader, but Google's doing a great job. Their spending is very high. I think they're looking to over double last year's spending this year, which is a bit of a concern for investors. But they're showing a lot of, benefits for that. The revenue on cloud computing was up 48% over last quarter. The quarter before that, it was only 35%. So they're continuing to move the needle in the right direction. Their margins are up 30%. So this is an expensive business, a lot of CapEx, but they're showing that the returns are real and that they're delivering to consumers. So everything that we've got, unfortunately, is pretty bullish on Google. I say unfortunately because the stock is so high. It's hard to take a contrarian bet here. I wouldn't necessarily want to go bearish just because the stock is high, because all the data that we've got is pretty bullish. And so, it kind of washes out to a degree, but actually when you look all the way through our data and account for everything, we've actually got a slight bullish lean going into this one. I do like that they're coming off those highs a little bit, so maybe there's a little bit more room to the upside. But yeah, the data that we've got, pretty much bullish across the board. All of their segments are strong. And again, it's a matter of, I think people jump the gun on AI crushing search too quickly because, we forget about distribution. Distribution is absolutely the king, and everybody goes to google.com to search for things that they want. And now maybe they're just using Gemini on that instead, regardless of whether or not OpenAI is better or Claude's better or whatever it might be. Gemini's good enough right now, and so they're winning that battle.
Yeah, the death of search, we talked about this about a year ago when this stock was, actually it started to fall before we had the overall market slide in April of last year. I mean, the stock was down the first 3 months of the year because of potential for search getting taken away. That never happened. We talked about it repeatedly. But Landon, you know what? You looked at everything. The stock's at or near all-time highs in today's session. It's getting overbought on a technical basis. That growth rate on cloud, you mentioned that. I see that your data is they're beating the pants off of their competitors. Maybe AWS just because of the size of it. It's harder to grow at that pace. But they're expected to have, after a 48% growth year over year last quarter, now it's supposed to be about 50%. Are we getting to metrics that are just like going to start topping out here, Landon? Because this was the cheapest stock out of the Mag 7s a year ago. Now it's getting up in the middle of the road towards the upper end of valuations at this point.
Right, isn't that funny how free markets work? Like everybody sees them as cheap, so they pile in, and now they're expensive. I love it. But yeah, I mean, eventually you either get to unsustainable numbers or your conviction about the growth is confirmed, right? It's one of those two, and that's what you're betting on, is can they continue to grow? And I think that, like you said, yes, on the chart it's plus 20 versus plus 6, Google versus Amazon, but Amazon has been around longer. They're the dominant player, so it's much harder for them to put up like a plus 20 number in our data, obviously. But the fact that they are a smaller piece of the pie, Google, Alphabet, they are a smaller piece of the pie, there's a lot more room for growth, not only taking market share, but also this pie is getting larger and larger. As more and more companies continue to build out their infrastructure, not just AI, but just technology in general, it's just going to continue to grow the size of that pie. So they can increase, AWS can increase, Azure can turn around and increase. They can all three increase at the same time. Right now, it just so happens that Google Cloud is moving at the fastest pace. So, I do think that there's a concern with investors, like, is this growth assumption a little bit too accelerated? Is it too much? And of course, that's what earnings reports are, to tell us whether or not those assumptions are unfounded or not. My take on it is that I think that they're going to be able to hit at least this quarter. I think that the numbers are going to continue to come in strong. And then it's just a question of, okay, are we 48? Are we 50? Where are we guiding towards? Is the price, is $350 a share justified? And those are all questions that investors are going to have to answer themselves, and we'll see what the reaction is. But as far as our data goes, everything that we've got from search to YouTube to cloud points us in the direction that things are going well at Alphabet, and we expect a good number out of them. And so then it's just, what is the reaction at these very, very high prices? So we're slightly leaning bullish. I think that there's more upside, and again, I'd much rather see the market, them close at 345 or 347 today than 355. So that gives you a little, just a 2 or 3 points away to get that bump to the upside rather than closing at all-time high. So we'll see. But overall, as you can see from, this is the consumer demand data, you can see that we're pretty bullish. The data is. I just wish the stock was down a little bit more and give us more room to the upside.
Okay, so is that the reason you're only slightly bullish? Like, I want to hear a little bit more about, like, why slightly bullish? Is it because of where price is right now, or is it also because of just being able to meet that mark, given it's potentially a higher bar in front of it for Alphabet, Google? And then there's obviously the questions around CapEx, right? Is it justified? For them, it seems to be justified. Margins, that seems to be critical as well. What's your hesitation around why it's slightly bullish?
Yeah, I think a lot of investors are looking at CapEx and saying that I agree. I think this is justified. Look at how fast cloud is growing. Look at the margin growth, up 30%. So I think that one it's a concern when you double spending, but it's also like, yeah, but it looks like it's working. So I think the main hesitation is both the investor expectations and the stock price, which really they go hand in hand. I mean, if an investor is bullish, they buy the stock, that forces it up. This is, everyone knows this is basic price fundamentals, but the higher the stock is, the more bullish investors are, so the higher expectations are. And so, I'd love to see just a little bit of selling on Google specific, or Alphabet, specifically in the last few hours to get it down, to have some more room to the upside. But the data is what the data is as far as ours goes, and it's bullish across the board. So really, it's just a question of, can they meet these inflated investor expectations? I think they can. What's the reaction on on how the outlook looks going forward, and where does that compare to what everyone thinks is going to happen? So that's really the question. I think the stock price is telling us, hey, the bar's really high, and then our data is saying, hey, they're doing really well. And so right now, with us, the math comes out to be plus 23 out of 100. We're slightly bullish. 20 is our cutoff. So you could talk me into a neutral play. You could talk me into a bullish play. I think bullish is the way to go. But yeah, it's all about that investor expectation being so high, which is shown by the price.
All right, thank you, Landon. That is Landon Swan, co-founder of LikeFolio, with the latest data on Alphabet, Google, ahead of its results. Now, for the trading perspective, let's bring Kevin back in the fold. Tom, your thoughts before you guys jump into the example trade. Final thoughts.
Yeah, I think